Welcome to the Real Advisor Podcast. TRAP, TRAP. Please follow us and join in the conversation on Twitter @Advisor Podcast, where you can suggest ideas and themes you'd like the TRAP team to discuss. Also remember to like and subscribe to our YouTube channel and leave a 6 out of 5-star review on iTunes. Doing all this really helps us, which means we can do more to help you. Now let's head over to the studio for the latest pile of TRAP.
Yes, indeed, dear Trappists. Welcome back to what many people are calling episode 78 of the Real Advisor Podcast, TRAP TRAP. My name is officially Lick Lincoln, and joining me as ever in the digital studio of doom are the three other horsemen of the apocalypse: Alan the Storyteller Smith, Andy Ultra Heart, and Carl the Voice Della Voce Widger. Now, gentlemen, we have a show packed full of absolutely nothing. So let's start unpacking it straight away with some more high energy review read from my good friend, the Right Honourable Mr. Andrew Ursane Hart.
Thank you very much, Nicholas. Obviously got a bit of a cold, but that's fine, mate. We'll get through this. That's referring to you. Okay, so this review is from Jack Jones IFA, 6 out of 5 stars, so he obviously listens. The review is: I can't begin to imagine how many people these four have helped indirectly through the wisdom they share with their audience. Genuine thanks to the TRAP Pack. If you work in financial advice and haven't been listening to the TRAP podcast, you're missing out. One of the best, if not the best, resource out there for advisors. Part insight, part entertainment, always relatable. Whether it's challenging industry norms, sharing practical tips, or just making you laugh on your commute, this podcast delivers every time. Massive thanks to the team behind it. Alan Smith, Andy Hart, Carl Widger, Nick Lincoln. 6 out of 5 stars for me. This should qualify as structured CPD. Back to you, Nicholas.
Wow, Jack Jones, thank you. Jack Jones, of course, was a 1970s trade union leader. Smithy and I remember the name Jack Jones, weren't you? Thank you for your review.
Too young. He's also
appreciate that. And dear Trappists, please do keep them coming in. It gives us a real shot in the arm, and it helps boost our rankings and makes us go better on the algorithm on the interweb thingy-me-jiggy. Okay, let's put a timestamp on episode. Yes, I have got a head cold, by the way. So if my breathing gets onerous, it's just me having breathing problems because of my cold. Nothing more nefarious than that. Let's put a timestamp on episode 78. With some topical tidbits. We'll lead off with you, Watch.
How's your holiday, Nick?
How's my holiday, Ultra? Yeah, well, apart from the cold, very good. I'm in northeastern Spain, a little coastal village on the Costa Brava called Begur. The closest city is Perpignan in France. If you've been to the Costa, most of us, I think, go to the Costa Blanca, Costa del Sol, right? Yeah. Massive expanses of beaches, very wide open, big skies. This is coves and pines and cypress trees, and it's rocky and it's stunning. I would very much suggest. I wouldn't suggest coming here with a head cold, but you can't always plan these things, can you? So there we go. And you got to like seafood. They're light on their meat here. They love their seafood. So if you're not a pescatarian type, maybe avoid. But thank you for asking.
Sounds like heaven, Nick.
It is absolutely stunning. You saw the photograph I sent you. It is every corner you go around is a new bay. Yeah. With these rocks and these trees and this turquoise sea, and it's crystal clear. And snorkeling heaven if you like that kind of thing as well. Yeah. Would highly recommend. And you can fly from Stansted, dear Trappists, if you so wish. Thank you. Let's do this. Let's get this thing on the road. We've got quite a busy slate. Even though we're in the dog days of summer, dear Trappists, we're pulling it out for you as ever. The four of us are all pulling it out. Watch, lead off.
Yeah, so it's interesting, I suppose. There's going to be a couple of times where we're mentioning people that we've mentioned a good few times before. And this is Charlie Bellello YouTube video from Creative Planning. Mentioned him a good few times before. Really, if you haven't got on to Charlie Bellello and Peter Maluk stuff, you really should. This is a brilliant video about it's charts you should have on your wall, I think is kind of what he's saying, but it's 50 minutes or thereabouts of busting some myths, and it's really good. And at the outset, I suppose the theme is investing at all-time highs. And if you've got new clients coming in, it's probably easier if you've got existing clients and talking about investing now, and the best time to invest is straight away. But if you have new clients and you're struggling maybe a little bit with that conversation, should I not wait? It's an all-time market high. Well, this video is absolutely fantastic. He's loads of charts, loads of proof as to why you should just take the plunge and go and invest if you're a long-term investor, of course. He's got some really cool stuff around, the famous adage, sell in May and go away, and why that's an absolute load of BS. This year is a perfect example of that. It's up 16% since May. So, but also stuff like, should I invest in meme coins? And he has a chat about that. He mentions Fart Coin, and it's just a really easy watch with some absolute gold nuggets that I think every single advisor could use with their clients. So cannot recommend this one enough. I really can't. It's absolutely brilliant. So do get on that. And hopefully it helps loads of different advisors in their quest to finish the year really strongly, which we'll be talking about later on.
Good segue.
Thanks, Andy.
No, he's great for the charts, isn't he? I see the stuff he publishes elsewhere. The chart,
some of them are very American. So I watched one recently when I didn't watch it all because it was of little relevance. It was about the American housing crisis. So some are really relevant, some are kind of more generic, and about kind of general investing rules. And look, they are, they extol the virtues of index investing and diversification. And if that's along the lines of your investment philosophy, well then, there's absolute gold
he works
to be out
at
there.
Creative Wealth.
Yeah, I don't quite know the relationship, but obviously he was an independent content producer.
He's the comms director.
Yeah, and then obviously Peter just, I'm assuming, offered
just
him
saw
a
his stuff,
deal.
Jump on board,
and now they're all together. It makes a lot of sense.
The detail in his videos, which he puts out kind of once a week, there's so much detail in there that he can't be doing anything else except that.
Oh yeah, he's
content
full-time.
creation.
Full-time content.
And he has Peter on it then sometimes as well, and obviously we've mentioned Peter Mallouk loads of times as well. Top class guy.
Well, I mean, if Peter comes knocking, you're going to be listening, aren't you? So I mean, for Charlie, it's
as Peter mentioned last year. I think this ratio is out of control. We need to get this ratio back.
Yeah.
Have a word with him.
I'm sure he's well aware of your work, Nick.
Yeah, or maybe not. Okay, moving on. Storyteller.
Yeah, on I guess a similar-ish theme. The one podcast that I listen to, or in fact watch on YouTube every week without fail, it's the only one that I never miss, is the All In podcast. I think all of us, to varying degrees, watch it or listen to it. Or just favourite. No, he doesn't.
Yeah, I dabble.
He thinks it's he doesn't like his politics anymore.
Well, we've got a full view of Nick's hotel room.
Oh God, he could have made the bed. Jeez.
Don't zoom in, anyone.
No. Anyway,
he's making the bed now. I mean, seriously.
It's like
He's
that
literally
basic
making the bed.
instinct moment. People will be pausing and rewinding.
By the way, if you're listening to this, you've got to just check out on YouTube. Nick in literally making his hotel bed.
The Benny Hill music.
Yeah. Anyway, so the one that came out last week, the All In podcast, again, a theme that's come up quite regularly because there's this ongoing desire, certainly in the UK, not sure about Ireland, but I think so, about getting sort of traditional retail investors invested in what we'll generically call private market. So venture capital, private equity, private credit, all that sort of thing. There seems to be this underlying push from, believe it or not, our own government, led by Rachel Reeves, to get large company pension schemes, effectively corporate,
force their hand,
into this market as a sort of and British private business. There's no question, and we all know there are some outstanding companies which are not listed, not publicly traded, and they're fantastic. And we know, the big ones in the US, famously Stripe, and there's a few huge ones that are private, but they're the exception rather than rule. Anyway, the All In podcast is, there are four effectively venture capitalists, and they've all over the years been outrageously successful, kind of billionaire status, and they were unpacking the data on this venture capital versus public market. And of course, they're talking about the S&P 500 and the NASDAQ. And public markets in over recent years, 5-10 years recently, have significantly outperformed these really, really smart venture. Of course, there's always one or two venture funds that just do super well, but your chances of investing in them as a retail punter are close to zero. They're for the insiders. They're for the sort of the big boys. Yeah, actual zero, Nick. Yeah, not close to actual zero.
Yeah.
And so the more mainstream funds that you might be able to get into, based on, and their honest opinion was that the venture game is just different now. You just, getting into these venture capital startup funds that invest in, of course, they've had such a great run over the years in the US with these tech startups that have sort of grown huge, had a public listing. And the view was really from these experts, buy the S&P 500 and let it ride. That was kind of it. Anything else, the odds are so stacked against you. You might get lucky. Chances are you won't, and you will underperform. Not only that, you've got obviously a risk premium. Well, you've got the risk premium because in terms of the exposing your money, your investments to early stage as yet unproven, but you've got the illiquidity sort of gap in that you said it used to be your money was tied up for about 7 years. You're now looking probably up to 15 years.
Wow.
You're allocating capital and you want to buy a house, you want to get your money out, you want to do something else. You pretty much can't unless you sell it in the secondary market or something similar at which you'll pay that 30% discount on the sort of the price they've got. So just interesting, I thought that the gurus, some of the gurus, the experts, the guys who've made their trade in this sector are saying, cautiously.
Would have thought they would have been very pro it. They're marking their own homework effectively. So for them to come out with
but
that,
they're not. I mean,
interesting.
Nick's friend David Sachs was defending it a bit and saying, no, I think we can, that's the last 5 years, maybe the next 5 years. But of course, he runs a venture company called Craft. But by and large, the four of them were broadly negative on that as an investment option for most people. And the last thing I'll say is as it relates to the UK, I've noticed, don't know about you guys, Andy and Nick, but since the proposed rules on pensions and inheritance tax being applied on pension funds and effectively becoming less tax effective, I get a lot of information being sent to me by VCT managers just saying, look, guys, we retain this.
Yeah.
Tax-friendly thing, so you should forget about pensions now, pile into venture capital because it's got a tax break. We've talked many times in the past on this show about the actual returns just on normal venture in funds that UK retail investors can get access to, and the returns have been less than spectacular, shall we say, but there is a tax break on it. What are your thoughts, Nick?
Well, I think you guys know my thoughts on this. I've been advocating against it and what Rachel Reeves is doing, and I will continue to do so. I've got a very quick point. It's just Jason Zweig in the Wall Street Journal wrote a piece this week about how the university, it's US again, of course, but the US and universities have these massive multi-billion endowment funds, and of course, chasing out performance, they put a lot of their funds into these private equity things. Well, now, of course, Trump has come along and said, well, hold on, we're cutting back on your funding. We're going to cut back. If you don't bring in freedom of speech across your campuses, there's going to be implications for you upon the money you get from the government. And there's just a whole sort of pullback from university education in the States, because a lot of, we know that hundreds of thousands of American graduates are saddled with enormous debts from universities, degrees where they just can't find any work, where they're flipping burgers at Wendy's or what have you, or In-N-Out, or whatever it is, and there's a shake-up happening. Of course, these universities now are having to clamp down. They're trying to get back into their funds to get the money out to keep going, to pay the principals, to pay all the administrators, because that's where all the money goes these days, and their funds are locked up in these private equity ventures, and they're finding it really difficult to get liquidity. And this is the big thing. I just think the whole thing is going to be a complete shit show, excuse my language, and I hope we pull away from it. I hope there's a change of government before this gets too entrenched. Yeah.
Yeah, well said.
Okay.
All right.
Lincoln trying to multi. Oh, Christ, it's me next as well. I'll be quick on this one because Ultra thinks this is very boring, and maybe it is. But I mentioned the FCS FCA levy a few episodes ago. How mine had gone up, but it still wasn't where it was a couple of years ago. So I put a survey link out to the IFA forum. Have I mentioned the IFA forum? China.cc/IFA forum. Got a good response, very detailed response. 12. I'm taking that as a representative example of the UK financial services thing. 8 out of 11 respondents indicated their total levy has increased since the previous one. However, when compared to 2 years ago, the levy is generally still down on where it was. So all in all, good news. I won't belabor the point. I just felt I had to address it as I did bring it up beforehand, and some people had bothered
Can we
to respond.
blacklist
So
those
there we
12
go.
people for? Can we blacklist those 12 people for Trap Live 2026? They've shown their colours.
They are most of our audience.
Why would you blacklist them? They were the ones who submitted. They participated. But it's I mean, I've by the way, I've seen surveys go out before with not many more people. You know, breaking news, blah blah blah, and you look at the sort of small print. This was a survey of 15 advisors or something. Small sample
I mean, it was
set.
entirely self-serving as well, and it wasn't particularly. I don't mind that people didn't bother responding. Okay.
God loves,
Mate,
God loves a
I
trier.
think Andy was right. His judgment.
Thank you, Alan. Thank you very much.
I'm going to
just
timestamp
repeat
that and edit that bit out. Mark,
No, it's
Right, mark
unfiltered,
that, okay.
unedited. We've only done 3 edits, I
Okay.
think, since we started.
right.
And we don't
Wodge, you're
talk
talking-
about them.
you're-
We don't talk about it.
You're talking about nitrogen, Wodge, apparently.
Yeah, so Nitrogen, formerly Riskalyze, whose brilliant conference I went to a few years back in Boston, they've introduced an integrated AI note taker. Now, I'm not putting this on our docket to talk about this particular piece of tech. The reason I bring it up is this is, for me, the first sign of real integration. And surely be to God, this is exactly what's coming down the road. So I made the point before that, you know, having dozens of pieces of tech, different pieces of AI, you know, trying to feed into a firm is probably going to cause problems down the line. And I would love to know, I'd love to be hearing from the platform providers, from the CRM providers, as to what plans they have, because I think that might help all of us advisors in terms of how we're looking to structure our technology into the future. Because platform providers, CRM providers who are not looking at this, they will die for absolute sure. This is an obvious, development in the world of financial advisory technology. You know, people used to talk about your tech stack. Well, who's going to be the first to come with their tech stack all in one? And you'd pay a lot of money for that. You really would. So I think it's a huge, huge, huge opportunity. And I know there's the likes of Seckle, there's the likes of Timeline in the UK, you know, people who are really fundament, who are at the cutting edge of technology. I'd love to hear about their plans, and I'd love them to make them public, you know, and say, this is what we're working on. And that might help you in terms of where you kind of work towards yourself. Because I don't know, I know Alan was an early adopter in a lot of these things. And I was very much sitting on the fence waiting for it to kind of, you know, to play out. And I probably still am to a large extent, albeit you can't wait around forever. So that's why I'd like to hear, I suppose, from the CRM providers in Ireland, but also in the UK, what's coming and where do they see it? You know, can you have a one-stop shop for a tech stack for a financial advisory firm? Wouldn't that be just wonderful? Is it coming? Surely it is. Surely there's a huge opportunity.
Yeah, there's many points to unpack there, Carl. I think every company is keeping a close eye on AI, what it will replace. I think Eric Schmidt, the ex-CEO of Google, he said in the next year, I think pretty much all the programmers and developers inside Google will be replaced by AI. Like, again, so all the enormous companies got an eye on it, but specifically to our space, yeah, all of them are thinking about it, but things are moving so quickly now, they're not quite sure exactly what to do. And this, we want one company to do everything, one tech stack, full integration. That's always been the case. You know, I've been in the business 20 years and it's always going to be best of breed. I don't think there's going to be one company that does it all very well. There's not going to be the platform, the CRM, the AI, the cash flow. I know some companies are trying to do it, but I've always been the player with best of breed. You know, I'm going to use my cash flow system of that,
agreed.
my platform of that. I'm going to use my calendar booking system of that. I'm going to use my AI note taker of that. I'm going to do my storage management system as that. So there will be companies
That's
do it all.
not scalable, Andy. Unfortunately, it's just not scalable.
It's the state of play. It's the state of play.
It is a state of play, and I think that's therein lies the opportunity. Like, who's gonna, like, surely a platform provider has enough, is tech savvy enough to be able to.
Well, it's almost saying that the one-man band will have better tech going forward because they can pick and choose and doesn't want to be scalable. Whereas the bigger firms are going to have to settle for something not suboptimal.
Suboptimal.
Or maybe it could make a solo advisory firm practice really, really profitable if you could get this. Now, look, I know it's the holy grail, and I know I'm asking for the impossible here, but maybe maybe you only have 3 different pieces of software that you use in your business. Surely that's coming. Surely we can move towards there. Surely you can find a platform that talks to Voyant or CashCalc or any of these.
The talking will happen. The APIs and integration will happen, but it won't be the platform doing CRMs, and it won't be the CRM doing platforms, and it won't be AI doing platform, etc., etc. There'll be a bit of a mix and a bit of a hybrid, but the current where we are with tech is, I think, the most interesting I've ever found it. Just before, there's been minimal increments of development, whereas now with the AI just blowing up everything, it's insane.
I think that's a very well made point. That that we've really kind of been as you were for the last decade, and now there's an explosion. Yeah. So what happens? If the explosion is like 16 different software pieces that you have to kind of piece together that puzzle and decide yourself, I'm not sure it's going to help us, and it's certainly not scalable. And I think the solo advisory practices would probably be better off than bigger firms trying to piece all this jigsaw together.
That's always been the case. The leaner you are, the quicker you can make decisions, the less committees you need to have. I mean, it's insane. A friend of mine works at a large platform, and she told me the other day that they've been working 18 months on this. I think doing taking tax-free cash from a pension directly into an ISA, and they've been working on this project for 18 months.
Christ almighty!
It's just like, and think of the amount of brain power that's gone into this project that loads of other platforms are already doing. So large companies are always just going to be, at the back of the pack. But Alan, over to you, my friend. You are the AI tech guru.
In the kingdom of the blind, the one-eyed man is king. Carl, just to clarify, what was it the Nitrogen are doing? The built-in an AI.
So Riskalyze are I suppose
they're like a risk profiling tool, are they?
Yeah, but it's a really, really cool one. And if you go with the idea here that, well, this is just a compliance thing that you have to do.
Yeah.
Well, the Riskalyze one is the best I've seen. I actually asked them could they bring it to Ireland, and they couldn't, unfortunately, for compliance reasons, etc. Right. I guess they could have, but it would have taken a lot of time and effort and money, and they didn't want to because the market's too small. But so Riskalyze are trying to kind of. I haven't heard this one in a while.
And they'll also see that I was deeply uncomfortable with the content of some of today's podcast, owing to the Irish versus UK cultural differences. Mm-hmm.
On that note, how did Ireland lose the third test when it's pissing down with rain?
What the Irish and British Lions, is it?
I think some people were quite keen to point out it was an Irish team, and they subsequently lost in the pissing down rain. How?
Yeah, look, we are very, very, very fond of Joe Schmidt. He turned Irish rugby around. We had to give Joe something. I think it was nice. I think it was nice. My old pal Joe. Joe was very, very, very good to me when Meta started up.
Did anyone catch the Australia-South Africa game? What happened? Australia were
22-0 up, and they were beaten 38-22.
Hugely up. They're 38-22 at the end. Yeah,
Razzie is not happy. I would that South Africa camp is not a pleasant place to be at the moment. But anyway,
I'll be heading to South Africa in 2 weeks' time, so it'll be interesting to see what they've got to say about it.
Excellent.
Oh, you've got interviews lined up with the South African rugby team. Well done, Ultra. You've surpassed yourself. Storyteller, can you lower your hand?
It's back to yeah, but I'm still my shout because Carl was just clarifying this nitrogen. So now they've got this basically a fancy risk profiler that does AI notes. Is that what you're saying? Is that the
pretty much? Yeah.
Right. Okay.
So how do you develop out that that platform to do way more stuff. So this is
So my understanding of this is trying to understand all the various tech providers in the UK and people that I know and have spoken to, and they've all got their so-called roadmap. This is what we're going to be doing, and I was trying to piece that together and work out if sort of this magical thing existed, Carl, that we're looking for. You want to find out early who's likely to do this. There's no guarantee they will execute successfully on it, but you have to understand what people's ambitions are. And I'm not aware of any company who's trying to do exactly that. Some are definitely broadening their range of services and options, but I don't think everyone. There are a lot of moving parts in a financial planning company, a lot of different types of technology. You've got the stuff we use for our normal day-to-day business, and you've got other stuff that any company would use, like, as you say, Andy, like booking meetings and there's now note-taking, AI-enabled note-taking, and a whole bunch of other things. So the crucial aspect here is, and if we're focusing on AI is all about data, isn't it? It's just about having information, having access to all your historical exchanges, notes, meeting notes, phone calls. The more you've got, the more beneficial it's likely to be. So you need what we're calling our kind of North Star, central source of truth, whatever. Where is all the data sitting? And for us, anyway, it is our CRM system. The CRM systems they've got first mover advantage because that's historically where data is kept. Feedback I've had from some of these companies is that IFAs historically haven't been great at keeping, high quality data. There are lots of fields missing. There is information missing. So there's a big point of this is, first of all, clean up your data. Try to fill in like the bits which are missing because it'll be more beneficial. And certainly as of now, everything that you do every day, every email exchange, every meeting, every conversation should be stored somewhere, because that will just become so beneficial to you as you go forward. But having been down this road, having tested God knows how many of these different systems, I think I mentioned this before. I think I did anyway on a previous podcast. We've effectively narrowed it down to three tech. That's our tech stack, our sort of core tech stack, excluding Microsoft or any kind of more generic things. Our financial planning tech stack. Naming names for us, it's Intelligent Office, which we've been using for years. Far from perfect, but it's probably the best.
Microsoft, Microsoft runs most businesses these days, and that's becoming more the central place.
Yeah, but what you want to have, you can have sort of. I mean, we use Microsoft like for Outlook and email and Excel and stuff like that.
It's got so many different elements to it now. It's got so many more pieces.
But you're gonna have to configure it yourself. And this is the other thing, and we all know, or certainly Andy, Nick, and I know, there's a few financial planning companies that kind of try to reinvent themselves, or in the absence of having really good tech, they've tried to build it themselves to varying degrees of success. I've taken the decision, I'm not going down that route. I'm not going to try to be a tech developer company, hire engineers and build all that, because you need that. I'm familiar with Curo as one of the back office systems, CRM systems, which is built on Microsoft Dynamics, or at least it was last time I looked. And they were always making the play that, we can leverage Microsoft's multi-billion-dollar research budget, and we just sit on that. But the feedback I've heard from others say, yeah, it's all right. It's not kind of absolutely game-changing. But nevertheless, anyway, so we use IO as our central source of truth. We've been using it for years. So we've got a lot of data in there, and we're able to now to sort of do a back search for things. Prepping for, and what would be great, talking about time saving. You think of all the things you do in the normal course of events. You prepare for a meeting. Most of us have regular meetings almost every day, certainly every week with existing clients. And and sometimes we've known them for 10 or 15 years. And there's a lot of exchanges have happened in that time. And so you've got to prepare for your meeting and try to remember the last thing, what you said at the last meeting. So what we can get now is we can just take a meeting prep note, which summarizes all the key points, the very specific things you talked about at the last meeting, what was agreed, and any other kind of lifestyle type events, things which may have happened, and dates and things they might have mentioned. They were going on a big holiday, and it sort of comes up rather than just that. that will just save a bit of time every time you go into a meeting, and then going forward, you're building on that data. So we use that.
It'll make you a better advisor as well, Alan.
It'll make you a better advisor.
Yeah.
By the way, I was thinking there's a window of opportunity, and maybe for a year or 2 years, where your clients think you're a freaking genius. You know everything about them. You know their inside leg measurement, their daughter's birthday, and her boyfriend's name, and all that. And then eventually they're going to go, this is AI, isn't it?
Yeah. You didn't really give a shit.
Yeah, exactly. Your little machine popped up and told you all this stuff. Yeah. Anyway, so we use AI, we use Saturn, and we're using Timeline, and they all kind of integrate. My belief from what I've said, and they'll tell me if I'm wrong, but I don't think that Saturn or Timeline have ambition to become a fully fledged CRM system with all your back data. That's a complex offering. Isn't
I
the most
appreciate that. Yeah.
It's not the most profitable. If you're starting a tech business, you might not be creating one of those. But the key thing is it all integrates and speaks to each other. So we've gone from being me leading from the front as always, and in the sort of magpie shiny new object. Oh, there's a new one. Let's try this. But it's fine because we've gone through that, and now we said, right, of all these various tools and things that we've tried, these probably represent best of breed right now. They by and large speak to each other. One feeds into the other. It's not perfect, but data flow back and forward. So we've got a fairly streamlined tech operation using, let's say, 3 of the core things plus Microsoft, and it's a work in progress, and it's building. But I agree with you. If I'm projecting forward a year from now, and honestly, we really are seeing significant material gains, and the main thing is productivity and time. And it's a virtuous cycle because, you know, there's no question that some of our team and the support team, Paraplanner, associates, etc., they've got an extra hour or 2 hours a day at the moment. And obviously I'm saying, what are you doing with that time? And what it means is we've got more capacity. Number one, we can, and people have always been in financial services in my business as well. They've always stretched. They're always, I'm so busy. They're always taking on too much. Now people are just a little bit less busy. They're not quite as, you know, running around like headless chickens, which is great. And so they're able to be a bit more creative. They're able to think a bit more about the next client meeting. But more importantly, and there's some people in my team, shout out to Ashley, who have taken the time to then build another level. They're going into something like Microsoft Copilot, which is an existing, you know, Microsoft AI tool, and saying, right, what can it do?
Grab yourself a drink, a very long drink. It's story time with Alan Smith.
Thank you. I haven't heard that for a little while. It's good.
Right, Nick, your point.
Yeah, I'm done.
Well, are you done, Smithy, for the minute?
Well, I'm apparently. I was just saying time creates more time, and then you can decide how you wish to deploy that time. And in our case, we're building other internal tech tools using existing technology like Microsoft. So fast forward a year from now, we ought to be absolutely, you know, super efficient and lean and flying. So it is a good thing to do, Nick.
Okay, mine's just a quick one, really. So you mentioned 3 bits of financial services related tech, and you said IO and Saturn and Timeline, but surely your platform is is that just semantic? But the platform is a fundamental part of the tech stack, and that's financial services.
It's 80% of the tech stack, Nick.
Yeah.
But
I'm just making the point that
fair enough. It's as Andy calls it, it's plumbing, isn't it? The platform just provides custody, trading, admin. It's not adding. You're never going to store. You've got client data as it relates to their, you know, investment funds, but you haven't got a lot else on it. You haven't got the sort of.
Well, I use my platform as my back office system in terms of just, you know, client national insurance numbers, address.
Yeah, it's got a lot of MI behind
all
it,
that
actually.
kind of stuff. So it all depends. I mean, I mean, you could say IO is plumbing, really. I mean, that's just a bloody.
No, it is. It's all
third-party back office system that wasn't even designed for this thing of ours. You know, it just happened to be.
But there's varying degrees of plumbing. There's ones which are just, you know, pure data. I think things like Saturn is a bit more, you know, proactive plumbing in terms of it enables you to deliver a better service, be more efficient. But the other stuff, it is kind of largely commoditized. We should have another chat sometime in the future about platforms, because that's quite an evolving space, isn't it? And we've gone through and we're going through, you know, a few issues on platforms. But you guys have been loving Transact for years, and it does what it says on the tin, doesn't it? It just delivers
It
and
absolutely
gives you
does.
data.
Ultra.
Yeah,
Ultra, your
just
hand is raised, sir.
stating the obvious. We're all talking about tech, which is out there. It ultimately comes down to the individual and the company to use it properly. Just because I've signed up to Voyant, it doesn't mean I'm producing great financial plans and utilising the tech correctly. Just because I've signed up to
This
that,
is true.
just because I'm using, you got to learn your tech. People have an iPhone, they don't even know how to freaking send an audio note or send a picture or do anything useful on it. So whatever tech you decide to use, just get really good at using it. You'll be ahead of the pack just being able to use your tech really well. Some people have all the latest tech, they can't use it for fucking love nor money. It's completely and
pick one
utterly
out.
pointless.
No, that's the amount of people I've met before who've said, name your software provider, or X is absolutely shit. I said, do you know how to use it? Do you know how much time have you spent learning? Yeah, not much. And so people are very quick to blame the technology. It's not very good. It's too expensive. And what they do is then they dump it. Dump it, and then they go and get a new one. Because, as I've always said, I have been to countless tech presentations about all the amazing things it can do, and rarely has it ever delivered on what I just saw as a presentation. And because they say, yes, that's coming, that's on the roadmap, that will be Q1 next year, and blah, blah, blah. And then it kind of never is. So it's very tempting to look at your incumbent, your existing tech stack and say it's rubbish because I haven't learned how to use it, and then go to a presentation of someone else who's saying our new shiny thing is even better.
Yeah, advisors are lazy. They're constantly looking for shortcuts, but unfortunately, there's no shortcuts.
I'm just conscious of time. Let's move on down the slate, and sort of segueing in naturally, because when you come to sell your business, you need to have data that is clean and valid and easy for the purchaser to go through as you negotiate your exit price. One of the people who's very good at that is a close personal friend of the show, of course, Rob Stevenson. I understand, Smithy, he's got a new book.
He has. Rob has. It's only been 10 years in the making, because I remember speaking to him a decade ago, and he actually says this in the book. He started. Everyone talks about writing a book. So he started writing. He sat down. He said he explains it sort of very eloquently at the opening of the book. He was on holiday in Spain or somewhere, sat down, writes the sort of first few lines and said, this book will be finished in no time at all. 10 years later, he has finished it. So Rob just created or published a book. It's called The Exit Playbook. There is, I think it'd be fair to say that every business owner exits their business at some point, one way or another, whether they sell it, whether they retire, whether they give it away, you will exit your business. Rob, to my mind, is the number one go-to expert as it relates to financial services, financial planning. And he talks much more about just, growth and succession. You don't have to, this is not necessarily about a big, massive exit and sell, but every business should focus on growth, and every business needs to have some sort of succession plan, at least outlined. So Rob has put all his best ideas of his entire career into a book. It's called The Exit Playbook. It's quite interesting. You'll like this, Carl, because he published it. It's an ebook, and he's published it online, and it's £100 to buy. And I thought, and you could get a discount. And I thought, he's my mate.
80,
I could probably get the discount code or something. But I thought, no. A workman is worthy of his hire. He should be paid, despite the fact he's a close personal friend of mine and the show, you should pay full ticket, full price for everything and buy it and support people as well. Anyway, I bought it because it reminded me, Carl, of when Andy published his book.
Oh, shut
up.
I have bought Rob's book. I bought it with the 20 quid discount, so I paid 80 quid. Yeah, support other advisors when they're launching new content ideas. It's a 100-page PDF. I'm sure it'll be great. I haven't read it yet. It's not hugely something that I'm going to be doing imminently, let's say, but I'm obviously interested in it.
Back to you though, Andy.
Back to my book. Yeah.
Let's talk about your book.
Your first book was it was a good effort, in fairness to you.
I know how long it takes to put these books together.
Didn't you say you're going to write another book, aren't you?
I am going to write another book, yeah. So the first book I wrote was called The 5-Minute Money Message. It was more like a notebook, whereas my new book, which is in the making...
An incomplete
calendar with a month missing.
There was a week missing in August.
Yeah.
That's detail.
And it fell apart.
28 days have August.
I still see
Carl,
people with it.
To be fair, he shipped it. Me and you bought it. because we support.
I was the first one to buy it. I was the first one to buy it.
I might have been
Very
second
kind,
or third, and I
Just
flicked
for the
through
record,
it.
I did not buy it.
Came apart in my hands.
That was when you were trying to get part of the gang, Carl. So you're on the front foot.
Yeah.
Now you're in the gang. Now we can't get you out. That's the problem.
But anyway.
Right, come on, stick to it. Stick to
No,
the
just
slate.
exactly. So Rob has written this book. I have read it. I read it in pretty much one sitting because I like all that stuff. I need to understand how the whole game works, and it's brilliant. And anyone who's got ownership or plans to run a business, you should absolutely buy it. And not only that, it points you to his website where there are countless tools, templates, downloads, things that you can use. Rob's effectively doing proper, full-fat, comprehensive financial planning to financial planners. Begin with the end in mind. And this is a strategy. This is how you do it. So
And
big shout out to
overall good guy too. So
good guy and great content and a great book. That's it.
He's okay. He's okay, Rob. Great stuff. Okay, there's no link to that, by the way, Smithy, in the show notes yet. Have you got one to put in?
Yeah, I'll pop it in.
Okay, thanks. Okay, next thing on
Can't
the
use
slate
the
is me.
tag, can't even copy and paste that guy.
Our tech guru. Sorry, Nick. Go ahead.
Stop interrupting
There's
Nicholas.
a balcony out there. It's about an 80-foot drop into the sea, and I'm just contemplating running over it and screaming hallelujah. Right, close personal friend of the show, Phil Bray, has come up with a new concept. Well, I think it's new. There may be something out there already, but I don't know. And I just thought I'd mention it. So we all know most of us charge on a per diem basis a percentage of assets under management, and perhaps sometimes we come up against clients where there just isn't significant investable assets to levy a fee that commensurate for your time and the value that you add, and so you politely disengage from the referrals, and that's not ideal because we are outgoing people. We want to help people, even if they're not right for our business models. We would like people to find homes. So Phil Bray has set up this directory of people that work for clients with smaller assets under management. So these may be IFA firms that have a fixed retainer model, who are just more comfortable working with lower assets under management, who maybe charge more for the financial plan and aren't so bothered about getting the client on board after that. And I just think this is an excellent resource. If you go on there, you can register with this. If you're one of those kind of advisors, especially if you're sort of a lean, mean, hungry startup and you just want to get in front of clients and you want to talk about financial planning and you're going to charge for the plan as opposed to charging so much on the invested assets, register yourself with Phil Bray. It's a publicly available directory that either the public can find and or you as the advisor, if you've got a referral that's not the right fit for you, you can go through this list and find someone in that referral's geographical area or maybe a firm that you know and trust and just say, you should try these people out here. They will work with you. I'm sorry I can't for various reasons, but these people might be right. So this is a growing list. There's a link to it in the so-called show notes, and I think so a really good move by one of the good guys in this thing of ours. So well done to Phil Bray of the Yardstick.
Great idea.
And Phil Bray he does do a good weekly newsletter. So go to the Yardstick agency website and subscribe to Phil's weekly newsletter. I think it comes out on Friday. Some good marketing tips on there as well. So
I think it's great. I normally give them to Andy, the ones that don't fit us, don't I?
Thank you very much.
and then he rejects them. And sometimes we give them to Nick.
I still never get anything from Andy, so I'm just not feeding through to the bottom of the pile. Yeah. The bottom is not good. The bottom is not getting fed here. That sounds wrong.
It is. I think it's a great idea. Remember, we spoke about this in the past. There was quite publicly, I think it was a Citywire article a little while ago saying that advisors, as a result of costs going up and everything else, some advisors were clearing out existing clients. So it's no longer affordable for us. We can't service you anymore, and there's certainly, and that number in terms of, let's say, assets under management or revenue seems to be getting increasingly higher. And there's some at 500,000, for example. And you think about the number of people in the UK or Ireland who've literally got £500,000 of investable. Yeah, there's plenty of them, but there's not that many, particularly in the. We've had a couple of inquiries recently, and they're classic Henrys. High income, someone earning 300 grand a year or something, but not a great deal of investable assets. We've got a minimum fee level. We don't have a minimum assets, but we've got a minimum fee. And I honestly just would not be, we couldn't add significant value net of the fee that we would have to be charging them. So I think, let's say, is the list, Nick, I haven't seen it yet, is the list like publicly available in as much as you can see the people who have subscribed? to
Yeah,
it.
Yes, it is.
In
Yeah,
an
it is,
ideal
yeah.
world, you just direct the client to it, and they would click on it and say Scotland remote
Right.
fee charging, and then it will
Well,
come up with three firms.
I'm
the
sure
thing
he'll
about
build
it,
that out in time if it gets traction. There's about 25 firms on there already. If he gets a few more, I'm sure.
Right, so
knowing Phil, he loves this kind of stuff. He'll do it.
Yeah.
I think what's important to be able to do is the sort of people that I've got recency bias because it's happened about 3 times in the last 10 days. What they want is they want a financial plan built, kind of almost as a one-off type thing, which we don't do. So, in other words, I wouldn't want to just send someone off to this list and then they go, "Oh, we don't do that." So it'd be interesting to go the next level of what services these other companies who are on their list provide. Do you offer comprehensive financial planning? Will you build a cash flow? Can you do a transaction or a one-off thing? Can you to understand the nuances? Because you don't want to just send people in a wild goose chase and find out that the other people don't do what it is that they're looking for. Anyway, that's my only feedback on that. But it's a great idea and it's a good list.
Good stuff. Ultra. Kel Surprise, another massive wealth management firm, throws in the towel.
Yes, so we did speak about this. We spoke about this a couple of months ago when Aberdeen were looking to sell their financial planning arm. They've now successfully sold it. They've sold it to Ascot Lloyd, who are a large sort of consolidator acquirer. According to the numbers, it seems like a good deal for Ascot Lloyd. It doesn't say how much they've bought it for, but it's going to add 6,300 clients and 3.6 billion of assets under management. And a quick run of that through a calculator says that that's around 571,000 per average client, which I'm going to call as not correct on those numbers. But that's what's been published. Aberdeen, I think it's a great acquisition for Ascot Lloyd. Aberdeen have done the heavy lifting. Aberdeen have got the funding, they've bought firms, they've done a roll-up, they've got it to a place, they've then started to lose money, so they've shifted a liability. Ascot Lloyd have probably picked it up for a decent clip, and then hopefully now they're going to fix it, turn it around, make it profitable. But yeah, someone else has gone out and done all the buying, selling contracts and the mess, and then they've sort of potentially bought a finished article, but it's never that easy, is it? There's always a lot of mess underneath the floorboards and lots of other stuff going on. So that's that article, and following on the same publication, a professional advisor have done another article saying it's entitled, "Was Aberdeen's financial planning arm ever going to work?" I mean, lots of large insurance companies have tried this over the years. We've all seen this. Historically, they don't work, but sometimes, every so often, they can work. So, interested in Ascot Lloyd have bought them. It's been a 10-year waste of time. They originally launched at the company name was 1825, which was the founding year of Standard Life. I think you were working there at that time, Alan. So that's that. That's the full story of the Aberdeen financial planning arm. Any points?
Yeah, I'm glad I don't hold any shares in Standard Life / Aberdeen or whatever they're called.
Yeah, I don't anymore. It's been a disaster from start to finish. They've never made a profit. They've lost money every year. They've sunk unlimited millions of shareholder money into something which was destined to fail from the beginning. In my opinion, it's. I mean, look, I've been on both sides of those type of organizations, and the culture and everything about it. If you are, as they are, FTSE listed business, it's just very, very difficult to get in the mindset of proper financial planning. There's stories I could tell you that I wouldn't say publicly. I won't, but it was just. Yeah, and Nick, no, I'll tell you offline. I think I've told a few of them. It was always just destined to be challenged. It's just so difficult culturally, financially. The financial planning is such a personal business. It's not like institutional asset management is highly impersonal. It doesn't bloody matter. You can manage.
Never the twain shall meet. Never the bloody twain shall meet.
And they won't. And it's just, and what happened to them every time, as you say, Andy, they did a roll up. And they bought a bunch. And actually, they started off, in terms of the firms they were buying, they started off pretty well. They were paying kind of beneath market averages, but some firms wanted to align themselves because they'd been using, as was Standard Life at the time, they had relationships with them. So they bought, who did they buy? I can't remember, but a bunch of like good, on average, good firms. But then they imposed their culture into these good firms, and all the best people left, because that's what happens. It's one of the few industries around the world where the assets can just walk out the door. You know, if you've got a contract, after 6 months, the assets and the clients walk out the door. So it was always going to be a challenge, and it's ended where we always knew it would end, back in the arms of a financial advice business in the form of Ascot Lloyd. So there we go.
There we go again. Que sera, sera. And this story will come up again in about 5 years' time with a different brand selling another failed financial planning arm. Okay, Wodge, Cleona. Yes, this ongoing and very worthy story.
Yeah, so look, I'm going to mention we're doing the 5K fun run again in Limerick in aid of Cleona's Foundation. So I just said I'd well, if anybody wants to travel from the UK or any of the Irish listeners, you want to come to Limerick, you can register. But look, that's not why I decided to add it to the docket today. It's just in terms of, here's an idea that we had, and here's how any advisory firm could do this to kind of build your profile. So last year, my colleague Ronan Quealy mentioned to me we should do a 5K fun run, because they do lots of them in Dublin. They have one big one in Galway, one big one in Cork, and there's nothing in Limerick. We should do it. So in fairness to Ronan, he took this, he ran with it, and last year we did it for Cleona's Foundation. So we covered all the costs. Cleona's Foundation got all of the money that was raised, and we got just short of 100 people at it. But one of the runners last year was a guy called Stephen Keogh from a solicitor firm called MHP Sellers. And I was having a coffee afterwards with Stephen. He said, we wouldn't mind getting involved in that with you and maybe making this much bigger. So we've kind of come together. So it's the Metas Ireland MHP Sellers fun run around Limerick. We've got a nice bit of media coverage on it. The Limerick Chamber of Commerce have got behind it. We're hoping to get kind of 200 people at it, create a bit of a buzz. We're selling it as kind of a business to business thing, a networking thing, a connections thing. We're going to cover all the costs, and then it's only 25 quid to register, so that all of the money then goes to Cleona's. But obviously we're raising awareness for Cleona's as well, but we're going to raise awareness for our own firm, and MHP Sellers will raise awareness for their firm. This does not cost a fortune. There's obviously, Ronan will tell you, an awful lot of organising goes on behind the scenes, but it's beginning to take off. It's beginning to get a good bit of traction. Any firm can do this. And it's your first port of call here is, how can I give back? What can we do to help a really good cause? And then you leverage off that yourself. So look, it's good business, but at the core, the reason why is a really, really, really good cause.
Lovely, Ultra.
That's superb, Carl. I just want to know what time are you going to do your 5K, mate? Going to do a public stamp for your 5K time?
So on my 50th birthday, I did 26 minutes and 17 seconds. If I run this one in less than 35 minutes, I'll be doing very, 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 very well.
That's what we call progress.
I was not going to do it because my back is killing me, as you boys know. And I was on the radio, and the guy who was interviewing me said, and Stephen was with me as well. And he said, "And clearly, guys, you're going to do the run." And instead of going, "No, I'm not going to do the run," because I was embarrassed, I went, yeah. So now I've told everyone on live radio that I'm doing it. So yes, I have to do it. It's on September 11th. So I have loads of time to lose that 2 stone.
September the 11th.
Loads of time. Just so much time. Right, okay, gents. That's excellent. Look, that's really good, Carl. Well done.
Yeah.
Well
Any
done.
firm can do this. Just think outside the box and put yourself out there.
Well done.
Listen, we're 54 minutes in. We've got 2 more items on the slate. They both belong to Storyteller, I think.
Yeah, very, very briefly. I mentioned on the last episode, I think, a young guy called Max Sullivan, who was working for a firm that had been part of a consolidator that bought up loads of other firms, and he'd left to break away, joined Valid Path, set up his own firm, and was happy. And he was just saying that Trapp had been a big influence. So I mentioned it, gave him the shout out, followed up. He subsequently sent me a message after that episode, after our last episode went out, saying, Hi again, Alan. Thought you'd just like to know that several advisors have reached out to me that are in similar positions and want to break away as IFAs. This podcast is a powerful thing. I thought I'd just give that a shout out. I think that is fantastic. We tell the story of Max, who just could no longer be in an organization who put the private equity owners first and the clients last, and decided to do his own thing, gone down that path, and then we mention it. It's like, again, a virtuous cycle, because then a bunch of other advisors feeling exactly the same check him out online and LinkedIn or whatever, get in touch and say, how did you do it? And he's helping them and coaching them through. And so I do think we are witnessing in real time sort of shifting sands in our profession. There is this huge kind of just big roll up, scale up, private equity backed consolidation. And it kind of relates back to the previous story about 1825 and Aberdeen and everything else, is that a lot of people just don't want to work in those organizations. They don't. And now if there are exit ramps and there's pathways to go and do your own thing where you are in control of your own destiny, yes, it's higher risk and it's a bit more difficult, certainly in the early years, but people like Max have proven it can be done. And I'm sure if anyone else missed that last episode, Max would be more than happy to have a chat with you, because he's passionate about it and he wants to share his own journey and help others to do similar.
And there'll never be the perfect time to do it. The perfect time to do it is, unfortunately, immediately. Just get on with it. The younger you are, the better. Less kids.
Perfection is the enemy. Perfection is the enemy.
Exactly. But if there are now like a small cohort of these people, and of course you have got, we mentioned it before as well, Haley and the Verve team, they've got an incubator type thing. But there is plenty of support around. But if you can speak to somebody who's maybe 6 months, 12 months ahead of you on the path, that's really helpful. Mm-hmm. And people are so giving of their time. They want others to thrive in this. So if it's on your mind, take some action today, I would suggest. Well, good.
And the last final thing on the slate. Come on.
Final thing, just a shout out, friend of the podcast, Brett Davidson. Brett Davidson, if anyone doesn't know him, there can't be many people who don't know him. Brett Davidson is a sort of coach consultant to the industry. He's been around a while. Straight talking Aussie, as he calls himself. Brett's got a band. I think they're called the King Rats. And Brett's band is playing a gig on the 17th of September at the Hope and Anchor. Hope and Anchor, a very famous place to have live music in Islington in London. So 17th of September, I'm going to go along. I'm going to take my son along. There'll be a few of us going along. So if anyone's in the area on the 17th, go along, see Brett's band playing live, and have a few beers and have a good night out.
Excellent. Good stuff. Okay. And that, with the typical effortless aplomb, thank you, leads on to the what many people call the meat and potatoes of the show, because we're all going through it, right? It's the summer kind of recess. We're just taking time off to recharge. We're on holidays with our loved ones and sometimes with our other selves, our spouses as well. Just sort of putting the world back in order and getting our minds mentally set up. But then September comes back and you're back into the same old. And talking of that Oz streak of piss, Mr. Davidson, friend of the show, he has a very good weekly email that he sends out. The link to that will be in the so-called show notes. I know that Wodge gets that email and thinks a lot of Brett Davidson. Wodge, what are you going to talk to us about on the back of that email and your general thoughts on recharging and gearing up for the next 12 months ahead?
Yeah, I've met Brett Davidson once in my life for about a 15-minute chat. I mention him so many times on this podcast, people are going to think Brett has compromising pictures of me or something like that. But it's not that. It's just, as we said before, it's like he reads my mind. And I got this latest email, and I think the title of it was something like Time for a Reset. And I've spent the summer going to festivals. I've been to Greece with my youngest daughter. I was away with my other 3 daughters as well. And there's been lots of fun times and relaxation. And now it's back to business. And this email was just perfect timing. And it was about, I suppose the theme of it is like, are you just going to drift now into September like you normally did? And you're going to drift and just get really busy? Because it does get busy, doesn't it, this side of Christmas? Certainly over here, we've tax deadline, that kind of stuff. And then you'll be kind of into Christmas, and then you'll be planning for next year. Or do you take a moment and go, right, how do I get really intentional about making some big decisions here. Now, the big decisions might be about short-term goals, and that's what I've decided they're going to be. So I'm getting really intentionally busy, but busy to finish the year really, really strongly with Metis and with the team at Metis. We had a board meeting last week and a senior leadership team meeting as well, and that was the focus, or that was the theme. It's like, right, let's not get too carried away, because we've spoken about AI and all those other bigger plans and the more medium and longer term goals or strategies. But for us, it's right. We set out really, really, I would say, robust targets at the start of the year. We're on track, but we will need to finish the year really strongly to make sure that we actually hit all of those targets. And what a great position we would be in if we get to the end of the year having absolutely nailed all of our big targets. So for me, it's, as I say, getting intentionally busy. We're doing a lot of a lot of events, I would say. So we've kind of, smaller stuff and some bigger stuff. We do have our client advisory panel meeting coming up in September. We've the Dublin Chamber of Commerce dinner. We've a couple of client events. I'm actually hosting the Ideas Exchange group in Metis in November, so bringing them into the office to show them around. And we're also aforementioned Cleaners Foundation. We're actually the main sponsors to their annual Christmas ball. So I've loads of stuff coming up, and I suppose it can only come from me in terms of, right, let's decide, everybody at Metis, what are we going to focus on now from here home? And from here home, it's, right, how many new families can we bring in, do financial plans for, and do great work? And it's that normally I'd be more medium to long-term focused, but it's like, I think it will just set us up for an absolutely amazing Christmas and then into the new year if we go and nail what we thought was probably impossible at the start of the year, and we're on track to do the impossible, and that will be absolutely amazing for us. So I was just interested to hear what you guys are thinking about this. Maybe you're not thinking about it at all, and maybe cruising into September is what you're going to do, or I think Brett calls it drifting. Are you going to drift? So who wants to go next?
Nick.
Sorry, you had your hand raised, Ultra, from previously. I hadn't lowered it, so I was expecting you to go.
Sorry.
So you might as well go, Andrew. Take advantage of the fact you raised your hand.
No, you go, Nick. We want to hear your drifting stories. Can't wait.
Yeah, I'm a drifter. I mean, my life's one big drift. Some would say towards the rocks. I'd say bobbing gently on the gentle waves of the Med. Yeah, I don't really. August is quiet because I block out my diary, and I'm married presently to TLP, who's out there somewhere on a sunbed. She's giving me the hotel room.
Pedalo going north.
Yeah.
No, she's not leaving because she's very excited. She's booked a beauty treatment for later on. Apparently, she's going down to the spa to get a facial, which she's looking forward to. So I know she's hanging around.
Are you not having one, Nick?
No.
No facial for you?
I need an internal. I need everything done. I need just a complete.
Just rip it all out and start again.
Just start again. Leave the ears. The ears are quite good. Everything else is a write-off. Work backwards from the ears. So no, I don't. I mean, the same with Ultra. My business has certain cadences. So yes, September through to November is relatively busy because I haven't done much in August, and again, February to April can be busy because that's just how Christmas time it slows down, and then it picks up again. But it's not a conscious effort for me at the start of September to think, let's go again. It's just I plod on at my same pace, and I don't have the same. You're obviously, I mean, Carl, you are, and this is a compliment. You are very metric driven, and you're very target driven, and I know you love it. And you've got that very swish back office MI system that you use to track how all your guys and girls are doing, and you review it, and I think you're on it. You don't shy away from having difficult conversations with advisors that are producing, and then more power to you. Obviously, my business is not that way. I do have a plan. I mean, I wouldn't say I am drifting. I mean, Brett might say it's true. I'm not. I know where I want to be. I've always said, you mentioned the phrase I use all the time, storyteller, earlier, about begin with the end in mind. You know, my entire business is built around it. Then I know exactly where I need to be at a certain point in life, and I'm working towards getting there. So for me, that doesn't involve stopping completely in August and then going, shit, let's bloody nail it again in September. No, because that's you know, I mean, I'm reading Jeff Bezos's biography, which is written a few years ago now, I think before he was divorced actually, and it's very interesting. And Jeff Bezos says we don't think in 1 or 2 year plans. That's nuts. We think in 20-year plans. You know, he thinks so far down the line. And that's one of the reasons he hates all these analysts who make short-term predictions around his business. He says, well, you just don't get the big picture. He's a big picture. And I'm not comparing myself to Jeff Bezos. I mean, we both have hair issues. That's about as far as it goes. But I do have a long-term goal, but I don't chunk it down into 12-month.
You've both got beautiful wives,
wheel,
Nick.
So.
You've both got beautiful wives. You've both got beautiful wives.
Thank you very much. Well, I can't speak for his, but I certainly do have a beautiful wife. And between us four, she'll be seething because I've left her. She wants to.
You brought her on holiday. You're recording Trap on holiday, leaving her alone.
You also told me before we went live that you haven't been great company on the holiday thus far because you've had your cold. So she's obviously.
Well, this is true. Well, the normally famous Lincoln levels of patience haven't quite been.
I was going to say
that's my view on this. But I know Brett is very much on this, and I'm not disagreeing with him. I think for certain business models, absolutely use the summer months to recharge, and just think, and then get back on that horse, get back on the saddle, and bloody crack on.
Yeah, you should read the email though, because it does say to take some time to step back and decide what's appropriate. And like the email goes into a lot more detail than I've described, and I've taken just a little piece out of it, but there's an awful lot more in there as well. So
yeah, I did read it. I mean, it's very punchy and bullet pointy, and there's a link to Brett's sign-up page in the so-called show. The so-called show notes, by the way, dear Trap, is just to let you know these are a thing of beauty. We don't put the show notes in each episode when it comes out because they've gone forever, but there is a central resource of all the episodes from a couple of years ago now. And every link is in there. And we've had some advisors say this thing's like a Bible to them because you can open up this Google Doc and just Control F or whatever it is in your Mac and search for the phrase you want. So maybe it is FNZ. And if you want to hear horror stories about FN, you'll find every link that we've ever talked about FNZ in those show notes. So it's a resource worth leaning on. And if your compliance person asks, yes, it is totally structured CPD. Smithy, let's do you, and then we'll close up on this with Ultra. So we'll go from a big boy thing to a little boy thing.
I did put my hand up, but that's fine.
Do you want to go?
Well, you never put your hand down. You're going to perpetual hand up.
You put it up and you don't talk. You put it down.
Well, it's working a treat, this whole raising.
This technology system.
This is great audio for our trappers.
Complete pointless.
I actually forgot about it until I saw Nick's little hand go up.
But no one see. We're the only ones that see the hands, Nick.
Yeah,
it's not. You don't
right.
see it on YouTube or anything.
So I put my hand up, and then anyway,
I didn't say they did say on YouTube.
Yeah. Okay.
Oh my god.
So how was that? Are you going Ultra?
You know my patience is wearing thin, and now you're making just
right. Let me keep it brief. Okay, so yeah, similar to Carl, I've been away most of August with my family, with my girlfriend, with my kids. Spent 2 weeks in Spain with about 8 kids, and got back last Friday, so I'm just about recovered. But it was fun and games. I think we're quite.
Did you have your humble brag out of office on?
I actually have. The only time of the year I have my my OOO on is in August.
Does it say I'm spending time with my family to recharge?
It said, I got it. I sent him an email. I got it. It said, I'm away most of August. If you have my mobile number, you can contact me.
Right, only the elite.
The inference being,
if you don't have the back number,
see you in September.
Yeah, no, it's not a humble brag. We've seen a few of them, but they're becoming less and less these days. The humble brag.
There's still a few.
There's still a few out there. We're very fortunate, or I'm very fortunate. I run my own business. In this business of ours, August is very quiet. People are away, but businesses still go on. And also December, I've also found very quiet. So I generally block out the whole of August, and I block out December from sort of December the 15th. Onward, so that's all good. I have all of my annual planning meetings early on in the year, February and March, on the financial planning business. For me, September starts with an absolute bang. So I'm flying off to South Africa for Humans Under Management Cape Town, and I'm also working very hard for Humans Under Management London in November. So my second half of the year really explodes. I also have servicing issues with, servicing requirements with my existing clients, but I'm not heavy on new client work and annual planning meetings in the second half of the year. Yeah, so I think it's good that Brett's made us all be a bit more intentional with it. We all do calm down in August generally, most financial advisors, and then ideally hit the ground running in September. And I think in the email he mentioned that September is an equivalent of another January. We all start January hard. We should think of it in two parts. Hit January hard and then hit September hard. Let's say. I think I've been doing that anyway. Again, my year's quite predictable. I wake up on the 1st of January and I've pretty much got a good idea of everything that's required within that year. That's just the businesses that I run and the dates that I have in the diary.
Nick, press the button.
All is good. You don't need to press the button. Alan, over to you.
Come on. Yeah. I wake up in January and I know everything.
Well, I know how my year's scheduled out. Nick.
Yeah, not always.
Spiffy, go for it.
Not always.
Andy, the ultra crepidarian Andy. He knows about everything, Andy. Can't be told anything. His name is Andrew Hart. Andrew Hart!
Oh, painful. Alan.
Very good. As we've said before, Brett Davidson is very clear that he is deep in his niche sector because he does write things that all of us just kind of quietly nod and go, yeah, got it. That's a good, it's often not something that's brand new, you never thought about, but it's really timely reminders. I hadn't read that. Thanks for sending it around. I will read it. The concept makes a ton of sense. It's very interesting being in the sort of business that we are with a kind of structured recurring revenue model. You can, with a reasonable level of predictability, predict your revenue in January or pretty much every year. Tend not to lose too many clients, tend to grow a bit every year. So it's predictable and
15%.
therefore, yeah, at least. And then, but it can be easy to kind of take your eye off the ball and just kind of drift a bit because, you show up, you meet clients and life goes on. So it takes a level of intentionality, assuming that growth is part of your ambition. And I don't know any businesses that intentionally want to stay the same or shrink. So everyone should be talking about growth, but growth does take intentionality and execution. You can't just talk about it. You got to do certain things. And it's quite timely for us. Like all of you guys, I've had quite a lot of time off over the summer and really did chill out. I find it quite difficult. We've talked in the past about kind of blending. Do you sort of keep in touch with the office? Do you keep up with your emails and what have you? And I tend not to nowadays. I let the whole thing go and sort of just chill out. But we're now at the end of August. We're now sort of back in it and getting in amongst it. And so we have, looking back on it, in my business, we spent quite a lot of time this year, early part of this year. I've talked about the tech stack and a bunch of other things and kind of operational excellence. And it's easy to say, quite hard to do. And you've got people and structures and processes and a bit of a sort of rearrangement. And we've kind of re-energized the plumbing in the business, the operational structure, with the intention of our number one ambition is growth. So we've just had a team offsite. We went, and by the way, we should go to this. We went away to a winery, a vineyard winery in England, a place called Balfour Wine Estate. And it was brilliant. Went there last week. Whole day there. We had a team meeting there. They've got all facilities set up, just about an hour out of London, just near Tunbridge Wells. And a beautiful sunny day. Had our meeting, agreed our plans and who was going to do what between now and the end of the year, with the ambition being about continued growth. And then we had a nice long lunch and enjoyed all the various wine tastings. So that was a good place to do. But the point of the story here is that, Brett's right and we're all right. We in my firm, we've done a reset. We've done it literally last week, and we are like coiled springs waiting for the rest of the year because we built the building blocks. They are in place, and it's now just up to us to execute. So, yeah, I think it makes perfect sense.
Okay, all right. I am conscious of time. We're nearly 75 minutes in. I think we're giving them. Are we happy with that meat and potatoes? It's about as good as it get, can't it?
Yeah, it's good enough for August.
Yeah. Okay, cool. We're on
it's a bit weak, but come on, it's summer.
It's summer, Trappist. We're knocking this stuff out for you. Other podcasts, I don't know about you, but the podcasts on my phone are pretty much dried up. There are the repeat episodes or greatest hits kind of thing.
They take breaks. We don't take a break.
We'll just have a chat, riff, go on schedule.
Yes, please.
We'll all have out of offices and just not speak to each other for a whole month. It'd be bloody joyous.
Maybe have a junior trap or something like that. Have a couple of kids on or something. Anyway, sorry, go on.
Okay. Even in Spain, Posty's tracking me down, and she's at the hotel room door now at room Ciento Ocho 108 for you peasants. But her sack is not. Her sack is dry. It looks like someone has emptied the sack. There's nothing in the sack. Well, this is interesting. So this might be a time for a bit of introspection. We have a reputation, the Trap Pack. We have a reputation for being outspoken and for speaking our minds, and we shoot a bit from the hip sometimes. We don't seek offence. We really don't seek offence. We don't look to piss people off, but it's a live recorded show. We've done 78 episodes. We're all quite punchy. We're all quite egotistical, and sometimes we say things that don't quite land, perhaps the way we do. And it's a little, not a mea culpa, but Wodge is probably the most conscious of all of us of not offending people. Which is a low bar, Wodge. Don't take that as a medal.
Yeah.
Tell us your story for this episode.
Yeah, so I got an email last week, I think, from John O'Driscoll, who I know of, but I actually haven't. I don't think I've ever met John. Maybe I have. I'm probably after making things worse now.
It's a good start.
John runs.
Good start.
John runs a firm called Blueprint Financial Planning, and I know the reputation of John's firm is that it's an excellent firm, and he does things the right way. So John wrote me an email. He took some time to write me an email, and he said that episode 73, I'll do a bit of quoting here, left a sour taste. He goes on to say that the inference that small brokers may not be on top of compliance is, in my view, both unfair and inaccurate. And then he went on to say that the Range Rover remark struck me as unhelpful. Now, to be fair to John, right, I've just taken some quotes out of the email that he sent. The email was very well put together. I obviously enormously pissed him off.
What was the Range Rover? Quickly, what was the Range? Give us context.
Yeah, so I suppose the context here is the episode 73 was about we were dealing with the question about RDR was in the UK. Should we bring in RDR in Ireland, or what's your thoughts on should they reverse RDR or whatever, right? So I was, I suppose the first comment was that I made a flippant remark, and I suppose I have to hold my hands up here big time, that I said something like, I have listened back to it, so I'm going to paraphrase here probably. I said that, well, I don't know how the solo advisors can complete all of the compliance that we are doing, because it's just enormous, the amount of compliance that we do. But John makes the point really well that, kind of how dare you say that, because I'm doing it and I know loads and loads and loads of other solo advisors who are doing it immaculately. And it's a fair point, and I shouldn't have said it. I do think that there are too many one-man firms in Ireland, and I do think not all could be doing it.
One person.
But for me to do a broad brush and say that it was unfair, and I apologise, and that's all I can say. Like, look, the Range Rover remark was about banning commissions, and I made the point that a small practice with 20 or 30 million can just take 5% and then take it again and again, and that's a direct quote from a client of mine. So I did not make that up. And but having said that, when you throw out a remark like, why do all financial advisors drive Range Rovers? That was the comment that the client made to me. Now, when I say then repeat something like that, that's kind of a salacious headline. So I shouldn't have really said it either. And it was a bit loose from me. When I look back at the date of it, right, it was out on the 19th of June. I was in the middle of a highly pressurized environment of my triplets doing
it was going so well, Wodge.
Their Leaving Cert results, or their Leaving Cert exams. So I was probably a bit cranky at the time. But look, I have there's just generally a couple of points to just first of all say, John, you're entirely right. I have told John I'm going to address this today, so I've got his permission to mention his name and stuff. But I suppose the beauty of Trap is I think we have done maybe 3 times in 78 episodes we have edited something out. Is that correct?
Roughly.
Yeah.
So we don't edit, at all. We shoot from the hip. We're all fairly outspoken. And sometimes there have been other times that I have said things on Trap and I went, oh, Jesus Christ, I shouldn't have said that. Or, but look, I think it is the beauty of it at the same time that we are uncensored. We do say it. And look, the last thing I'll say before I let you boys kind of have your tuppence worth is sometimes this is a stupid thing to say, an enormously stupid thing to say when we've like well over 300,000 downloads now, right? But it feels like I'm just chatting to you boys. And then it gets a little bit for me, a little bit loosey-goosey. And especially when there's things that I'm very passionate about, I might say stupid things that would be okay in a pub environment. And then I say them on this environment, forgetting, of course, that there's going to be, how many thousand people downloading it who are all advisors. I know there are tons and tons of really brilliant solo advisors. There are 2 on this show. So for me to discount them like I did was not fair. And I will be doing my best not to make these loose comments. But at the same time, hopefully it won't censor me.
Well said, Carl.
Sounds like a politician's apology.
No, it wasn't. That was unequivocal. Ultra, your hand's raised. Please tell me you've raised it properly.
Yeah, no, I'm gonna confirm what Carl and you have both said, Nick. So Trap is obviously 4 strong opinionated individuals, unfiltered, off the cuff. We speak for hours every year. During that, we're going to say things that may seem a bit harsh. We're going to say things that are probably factually incorrect, maybe mean-spirited, but that's just the nature of doing work in public, and we can't address every issue that people have concerns with. But obviously we do read all the comments that get sent to us, all the questions, queries and concerns. But yeah, I think that is its beauty, the fact that it is unfiltered, it is off the cuff, we can speak freely, and every so often we're going to drop the ball. I think people know that anyway, and obviously some comments are going to cut deeper than others. But we obviously need to keep that balance right. And obviously, the more the show grows, the more we get support from other brands. We have to obviously, again, juggle that situation. So yeah,
that's that's another story, isn't it?
We will offend people. It's like comedians, though. They do a whole sketch of 100 jokes, and then the person says, "Yeah, I liked 90% of the show, but I didn't like the 10% that was talking about fill in the blank thing that they've got a problem with." So there will be subjects that we discuss, like solos versus large firms, that might be a bee in someone's bonnet. We might discuss active versus passive. We might discuss fixed fees versus ad valorem. There's always going to be the thing that they get angry about. So that's just the nature of it.
Can I just jump very quickly before just to say, right? People have had a go at me on Twitter or X about other stuff, and really, I didn't think I should address it. So this is not I could have just buried that email and never replied to John and not said anything, right? This is not it's not a party political apology, Andy. It bothered me. The email bothered me, and the reason it bothered me was because he was right. And I do need to do better. And I really do mean that.
Yeah, that's when you know.
Yeah.
Right.
He was absolutely right.
I'm just conscious of time here. Smith, do you have something pertinent to add, or are you quite happy to say no? For once we've covered the Trappist questions, I don't need to interject.
No, I have something to add. All I would say, though, all I'm going to say is these are just our opinions. They're not necessarily facts of life. And we are all entitled to our own opinion. We're not entitled to our own facts, but it's just an opinion. And I'll say something, which is my view on the world, and someone else will say, you're wrong. And they're entitled to have their opinion. And that's it. But I think your point is well made. Your point is well made, Carl. After all these episodes, my God, I'm surprised we haven't had a few more emails like that over the years. So it was bound to be one eventually. It was good that he called you out, and it was very good that you acknowledged it, accepted it, made it public. We draw a line, we move on.
Onwards
we get better.
All right, lovely stuff. Okay, right, so we are at 83 minutes in. The software has yet to crash. I'm talking it up. Let's move on to what many people call culture.
Yeah,
Be
I was
quick.
scrolling through. I thought, sure, it's not me first. It's not me. Oh, it is. I have got 2 quick podcasts worthy of your attention. It's mentioned many times in the past, and they are a bit hit and miss. But so this is a very good one. Diary of a CEO, one of the more recent ones, where he got Daniel Priestley, Alex Hermosi, and Cody Sanchez on. Now, I don't know, you will know all or some of those people, but all 3 of those, plus Stephen Bartlett, are just big in the kind of business building, entrepreneurial, huge social media followings, all written books, all got YouTube channels, all the rest of it. And they had the 3 of them just to discuss and debate basically how to grow a business, how to win customers, how to market your services, any range of things. It's about a 2.5-hour long podcast. Wherever you are on your business journey, you would do well to invest your time to watch, listen, consume that podcast. I thought it was excellent because of the caliber of the people that were showing up and discussing it. And interestingly, a bit like us, they didn't all agree with each other on everything, which was good as well. So that's worthy of your attention. And now that we've talked as well, the second one I've got, as we've talked about resetting for for the rest of the year, and we're talking about business growth. There's a great podcast. I don't know, sort of thing that you might know about, Nick. Barron's in the US.
Yeah.
The Barron's podcast.
Awful. It's awful.
Now, well, again, it's very American centric and talking about 401ks and RIAs and all that sort of stuff. But they, every now and again, it's a really good one. So there was one a couple of months ago. I put a link in the show notes. It's a guy called David Newson, and it's titled Proven RIA, in other words, IFA, Marketing Strategies for 15% Organic Growth. So this was a guy who was he's worked for a few of the big RIAs. He's now doing his own thing. And again, I just thought it was really, really good. The detail he goes into about how to create and execute on growth strategies to pretty much be assured of 15% organic growth compounded every year. It's a great podcast, great conversation, well worth listening to.
Is it Barron's Advisor, Smithy?
Yeah.
There's a few on there. Oh, they've not come across that.
Barron's Advisor, The Way Forward is the title of the podcast. Yeah, Barron's Advisor, Advisor with an O. Anyway,
That's
that's
decent, thanks.
check them out. Check them out.
Next.
Go to Berlin for 2 days. Get the train to Prague. It's a amazing 5-hour train journey, and spend another 2 days in Prague. I brought my 3 daughters. We saw everything in both cities. It's a lot of walking. Both places are class. The Germans don't do nice, polite service, though. Unfortunately, you'd love them, Nick. They're just like you.
I went on a walking holiday to Bavaria about 3 years ago with TLP, and they're very efficient. I mean, the food's bloody awful. No one ever says, "Oh, I'm famished. Let's go out for a German." And there's a reason for that.
German food? Do you like German food?
The beer is sensational, though.
Yeah.
Absolutely
But the hotels
sensational.
are very odd. They're very like sort of dystopian. The ones we're in, the sort of red corridors just painted red. And But they're very to the point.
I did a chat GPT, give me an itinerary for 2 days in both places, and we pretty much stuck to it. It was amazing. So it was brilliant. Yeah. Do it.
Okay, good stuff.
Very good. Very good.
Me next. Okay, so in the UK, the FCA has kind of relented a bit on Bitcoin, hasn't it? And it's now allowing retail investors to invest in Bitcoin via ETN, exchange traded notes. And I remember exchange traded notes about 15 years ago when they were first launched. But a lot of things, you just you soak it up, then it just goes. So I listened to a podcast on the Many Happy Returns podcast, which I kind of dip in and out of. But one of the hosts, I'm going to get his name here wrong. I'm sure you can correct me. Ramin Nakisa or Nakisa?
Don't know, mate.
He's spoken at Hum.
Oh, Rami.
Oh, that guy.
I was drifting.
You weren't paying attention, were you?
Ramin.
No,
Yeah,
what's his
Ramin,
second name?
What's
his second name?
Is it Nakisa or Nikisa?
Nikisa.
Kisa.
Okay, good stuff.
He does not know.
He doesn't know. Anyway, they put out a podcast talking about this relaxing of the legislation and how retail investors can invest in Bitcoin via ETNs. It's like, oh my God, what a shit show. ETNs are promissory notes where you lend money to a bank. The bank then takes that money and invests it in an underlying bucket of securities. In this case, it would be Bitcoins. So it's an extra layer of risk because you've now got credit risk on ETN. So you're
Isn't
a
that
retail
what our
investor,
money
and
is
the
about?
FCA is saying,
You give your money to banks now. You apparently don't own the money. There's a whole movement
well,
going on
whatever.
about that
But
at the
with
moment.
Sorry,
ETNs,
interrupting him. Nick, carry on.
There's apart from the fact you've got wizards on clouds now got your
Yeah.
money. You've got credit default risk thrown in with these ETNs. So I just think it's lunacy. And they mentioned it in this podcast, which is only half an hour or so. It's decent if you want to get up to speed on the difference between ETFs and ETNs, which I needed too. They mentioned that the FCA said the reason we're not making these available via ETFs is because of our own legislation, which we've yet to update. It's like, Jesus Christ. I mean, whatever you think about Bitcoin, we are so behind getting into it. You know, there's potential, if you believe all this, there's potentially billions that UK investors could have accessed in terms of profit, or millions, certainly hundreds of millions, which is a billion. So I'm rambling. Anyway, it's a good podcast. Listen to it.
God,
Okay,
thank
that's
you.
me to finally close the show. It's another Diary of a CEO, another Diary of a CEO recommendation, podcast, YouTube. Manish Pabrai, who I'm a big fan of. He's a massive fan of Charlie Munger and Warren Buffett. He's written some great books over the years. He's a one-person hedge fund manager in the US, runs a very lean business run on the Buffett Berkshire fee structure. Sorry, the Berkshire Hathaway original partners fee structure. Anyway, check it out. He's a very smart guy. Doesn't do that many public interviews. Manish Pabrai on the Diary of the CEO. That's it. Over and out. Play the tune, Nick.
All right, superb. 90 minutes in. Thank you, dear Trappists, for your time as episode 78 comes to a close and slides round the U-bend of Father Time. Please do leave a review on your podcast app of choice. Also, likewise with YouTube, like and subscribe, hit that notification button, so every time one of these episodes slides out, you'll get told about it. But until the next time, take care out there. Adios to our beloved Trappists from the Trap Pack, and we will see you on the other side.
Bye-bye.
Goodbye.
Bye.
Nick, is there a reason you're bare-chested?
Changed his shirt midway through. He must have been sweating through the first one.
No, I wasn't sweating. No, I'm just going to race out and make up time with Penny, so I thought I'd just get...
Wizards and clouds coming from the bare-chested dude with the baseball cap and the shades on.
Figure of authority.
Who made his
Figure
bed
of authority.
live on TV.
Figure of authority. Right, we're still recording this, by the way, so let's stop.
Sorry.